David Dudding, you're a fund manager at Columbia Threadneedle. You're responsible for European equities here. First question is about the European economy. The recent signs weren't too positive recently. The PMI in Germany has been falling since December. How worried are you about this?
Not at all worried, to be honest, because we don't buy and sell shares or hold investments in companies because of the short-term performance of the European economy. So we take a much longer-term view, so the short-term movements aren't that important. And I have to say that growth rates in Europe are always sort of okay. They're never too fast, and hopefully they're not often too slow. It's probably best not to ever hope for explosive growth from Europe. It's a pretty mature economy, so we tend to be a bit longer term.
There are some Swiss stocks in your European fund. A couple of years ago, in an interview, you said if you had to buy a stock for your daughter, it would be Nestlé. But Nestlé disappeared now from your top 10 holdings in between in the last couple of years. What happened?
Nothing's happened. We still like Nestlé. I still buy it every year for my daughter, I have to say. And in the long run, we think Nestlé is fantastic. And getting better, actually, under the new chief executive. We think there's a renewed sense of purpose, and we're optimistic about the future there. If there is a problem, it's that the great strength of Nestlé is that it's very long-term, and the great weakness of Nestlé is that it's very long-term, and it's a very, very big company, and it's hard to change direction very, very quickly. So the changes are incremental because of the size of the company. So there's nothing wrong with Nestlé. The industry has changed quite rapidly. Obviously, there's the rise of local competition, obviously trends towards sort of wellness and clean labels in food, for example, internet shopping. So there's more change in the consumer staples industry now than at any time in the last certainly 50 years, if not almost 100. So it's a fast-moving change. We'll be very confident that Nestlé will be able to navigate its way through those changes in the long run. It has tremendously strong brands, great balance sheet, very good people. It's just in the shorter term, I think that we preferred Unilever for a various number of reasons. So historically, Unilever was a much worse company than Nestlé, and had been quite poorly run. And so they were sort of, from a stock market point of view, they traded much more cheaply than Nestlé. And there have been some big improvements at Unilever over the tenure of the current chief executive. It has a lot of emerging market exposure. It is becoming more of a personal care and beauty company and less of a food company, where it was always a poor competitor of Nestlé. But the trends in that industry are probably healthier.
Other shares which have been falling in the last couple of months are the two Swiss big drug makers, Roche and Novartis. Nestle and the two drug makers are heavyweights in the Swiss market index. You said you have healthcare stocks in your fund, but I didn't see Roche and Novartis. What's your opinion on these drug makers?
I think they're both very good companies. Roche obviously, has consistently spent money on R&D, and its track record is fantastic in that regard. And Novartis, again, we think that slowly the portfolio has changed in a good way. The problems of the sort of pharmaceutical industry are in many ways quite similar to consumer staples, and the issues that we mentioned at Nestlé. These are very, very big companies, and the outlook, there is constant pressure on pricing for drug manufacturers. and they both have different ways to get around that and to mitigate that. But when you're the size of a Roche and a Novartis, it takes time.
But you don't plan to buy stocks, either of them?
I can't comment on that, but certainly when stocks go down, they become more interesting than when they than when they do very well. So, and both are very good companies, and longer term, the increase on spending on healthcare carries on, and so they will both benefit from that.
As well, I mean, if the economy goes down in the next months or years, I mean, all three of them are defensive stocks. There's a fair chance the share price could rise because investors are shifting towards defensive stocks.
I couldn't agree more. And so part of the issue, I guess, is that people have been very optimistic about global growth and European growth. And as people become more pessimistic, their thoughts will return to Roche, Novartis and Nestle. So that's why these are great businesses for the long term.
Dave, thanks so much for your time.
Thank you, Daniel.